Hey everyone, it's Daniel here from Infovest. Hope you're all doing well. So I just wanted to do a very quick short video on the Bank of England coming out and giving a update on the whole printing of money and buying of bonds that they have been doing to basically help the gilt market and the pension funds and the financial sector from basically imploding. So I'm going to share here my screen real quick with you. Just give me a second. All right. So hope this works now. Okay. So pretty big, this is not surprising because I did mention this before that Bank of England's plans are not to do this QE. Like, don't think this is quantitative easing and that they're going to do this forever. And there was a deadline, and that deadline, I believe, is October 14th or 15th. I don't remember exactly which day it is, but October 14th, 15th is when we see the deadline for Bank of England to stop this QE or I should say non-QE QE program to help the pension funds. So basically here in this article we see there's in this Yahoo Finance article, it says Bank of England Governor Andrew Bailey told pension fund managers to finish rebalancing their positions by Friday, when the British Central Bank is due to end its emergency support program for the county's fragile bond market. Right? We have announced that we will be out by the end of this week. We think the rebalancing must be done, Bailey said at an event organized at the Institute of International Finance in Washington on Tuesday. And my message to the funds involved and all the firms involved managing those funds: you've got 3 days left. You have got to get this done. So pretty bold statement, right? Pretty bold coming from Bank of England, because of course, again, when you think about it, this program is not a pivot that people are thinking, especially in the markets, that people or traders might be thinking that the Bank of England is doing, right? And there's rumors that, oh, that Bank of England started to do the pivot. So guess what? That means that the Fed is maybe going to do the pivot and so on, right? And that again is not true. It's all false, and we're seeing it right here. Because if you start QE, that basically defeats the purpose of what all the central banks around the world, what they're doing, which is basically trying to affect the demand side, and they're hoping that the supply side will basically correct itself on its own, but at least affect the demand side by pushing higher interest rates so that they could bring this inflation down, right? They're still raising rates aggressively. They're still aggressively increasing rates this year, next year, in hopes that inflation will come down, right? And then if we scroll down a little bit more in here, we see that, okay, earlier on Tuesday, Pensions and Lifetime Savings Association, an industry body, urged the BOE, Bank of England, to extend the bond buying program until October 31st and possibly beyond, right? But Bailey stressed that the program was part of BOE's financial stability operations, not a monetary policy tool, and it had to be temporary, right? So this is worrisome, right? This is worrisome, and this is what you already see right here, that you have these associations coming out asking for, help us out longer, and Bank of England is saying, nope, we're just doing this temporary. You've got 3 days, get it done, or, whatever, right? So, and very interesting to see is in the markets, the reaction. If you look at the 30-year government UK gilt, right, the bond, this was the day where we had the sell-off. So right here, and this is basically what the chart I'm showing you here. This is the 30-year yields, right? So not the bond prices, the yields. So the 30-year yields basically collapsed on the announcement that Bank of England was going to do this non-QE, and now what we're seeing here is a complete reversal. And look, we're not so far away from where the tensions were just back in September, when the Bank of England intervened. So this time, I mean, if you just use common sense, or if you show a um, a second grader this chart, it would tell you that, okay, it looks like we are eventually going to creep back up to retest the highs around the 5%, and then possibly even break higher. And definitely traders who are looking at this, and anyone who are short, or actually went long, I should say, on the 30-year bonds, are basically now selling and getting out and punching out. And all those traders who are shorting the 30-year bonds in anticipation that yields, because remember, bond prices are inversely related to yields. So when bond prices fall, yields go up. So if these yields, or when these yields, I should say, we approach this level again, you can anticipate some stops being triggered here, and that breakout move that we could see. And if we had tensions here around this time, when yields were around about 5%, what do you think is going to happen when we approach this level again, and if we end up breaking out higher? Definitely all those pension funds and the financial system in the UK, especially the fact that 3/4 of this gilt market, 3/4 of it makes up, is basically the size of, 3/4 of it is the size of the UK's GDP. So, if you just think about it, if we end up moving up higher, everyone who's got 3 days, you basically have a very small window, a very small door, and for everyone who's trying to exit or rebalance their portfolio, pension funds with bigger money, they're trying to do this in a way that they don't cause these yields to basically skyrocket. But the door is very narrow, the path is very narrow, and as everyone, panics, and you have 3 days to get out, and doing any selling of gilts will cause the yields to move up. And then especially if Bank of England is not there to protect, then definitely, and they continue with their QT program and their rate hikes, definitely, it's a no-brainer that we could see these yields basically break above this white line and go higher. So definitely a very, very important market to keep an eye on. If you look at today's Tuesday, it's October 11th, and 2022. So if you look at the markets, the equity markets and the bond markets in the US, and you look at gold and all currencies, everything sold off as soon as Bank of England came out and announced this information, right? Everything sold off. So everything's quite interconnected. Everything is quite linked to each other. So if the UK markets are going to be affected by that, that's why closer to the end of today's market close, we saw equities, bonds, gold, currencies all sell off while the dollar rallied. So they are interconnected, they are related. So it'll be very, very interesting to see. And like I've been saying in my previous video, it is looking like we are getting closer and closer and closer to that pivotal moment of that breaking point. We don't know exactly what it is, but we're getting closer to that breaking point, and it looks like, it could come soon, especially if these yields continue to skyrocket, right? And if you look at also just the British pound on that news, so we saw the British pound, as soon as that information come out, just completely sell off from 1.11. So this is the pound against the US dollar. So 1.11 down to about 1.9. So quite the sell off as soon as BOE Bank of England came out and gave the ultimatum to the pension fund, saying that, hey, you've got basically 3 days, do what you gotta do, or else we're continuing with what we have to do, because we are on the path to bringing inflation down. And you're hearing this from every central bank. The theme continues to be the same over and over and over again. Now, looking forward for this week, we have inflation numbers, US CPI inflation numbers coming out. That's definitely going to be very, very interesting to take a look at. It's going to be very market moving, and definitely markets are going to react to that. It'll be very interesting to see what the numbers come out. Now, it's expected that the numbers are probably going to be slightly lower, especially the headline number, as it's energy related. However, that number could be shrugged off. That number could be shrugged off because after the news of Saudi Arabia looking to cut 2 million barrels, and we saw oil prices basically jump about 24% all the way to $90 a barrel. I'm talking about WTI crude oil. Definitely that's going to have upward pressure and going to push inflation, or the CPI report. We're going to see a higher number in the CPI report, probably in the next report, right? Especially if oil continues to move above. Now today it was a little bit down, and again, part of today's market sell-off closer to the end of the close during the North American session had to do with this Bank of England statement. So pretty big news. It'll be very interesting to watch, and as new information comes out, I'll do my best to continue to keep you updated and give you my analysis on all of these. If you find this useful, resourceful, please feel free to hit the subscribe button, hit the like button, bell icon to be notified, and comment below if you have any thoughts or topics that you want to talk about, or anything that you want to comment on this particular video, or thoughts that you may have. Anyways, good luck everyone, and I'll talk to you guys later. Bye.